Hey everyone, Bob Kendall here. Just want to introduce you to our entire suite of products. We're giving a 33% discount. Basically, it was $297 for the entire suite. Now it's $197 per month, and you pay by a quarterly basis. And this is access to everything we do. Our professional software, which gives you the ability to do multivariate trading, will also give you the WaveTech platform, market grid numbers every day, as well as our stock screens that were developed by our institutional certified financial analysts. Everything we do is included in this package. So sign up by the end of the month and get this special of 33% off. Welcome to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. As we get into tonight's video, there's a number of things going on in the background, but markets don't seem to be caring much about that. The premise that there's going to be an infrastructure deal fades as we go day to day. Last weekend, we saw Biden flip-flop. He was going to require both deals, and then he's not. If you listen to what the press secretary and other people are saying around administration, is that both deals are on dual track. So otherwise, the intention is to have both deals come to him to sign at the same time. And that, as I said last night, this basically negates the whole bipartisan concept that they are trying to present right now. And I don't think we're going to see a deal for a while. I set you up last week when we first heard about this, is that there's just going to be a ton of noise around this, and it's just not going to work out and be nice and clean. It's going to get pretty ugly before they figure out how to get anything through, if they ever do. And that's still at question, I believe, at this time. Meanwhile, the markets continue to edge higher, and they keep climbing that wall of worry. We're able to print new highs again on the S&P and the NASDAQ, but we did get an RXT sell signal on the NASDAQ. I'll go through that in the technicals here in a few minutes. One of the other things that occurred yesterday, we did see the 10-year downtick again from around 154 back to 147. We got an STX buy signal. I continue to expect to see the 10-year stay between around 144 to 154, and the extremes are going to be 160 and 138 on the downside. I don't see any of this being material at this time as we go through this week, and we're going to keep working towards the ADP numbers on Wednesday, and then ultimately the unemployment numbers on Friday, which is what everybody's really watching. The other thing that I noticed that happened yesterday, we saw Facebook print into $1 trillion capitalization, up big numbers. We also saw NVIDIA print up, and I'm going to do my best to find some companies that I want to talk about this direct to consumer model that Nike did that's so successful. A lot of people got to be eyeing that business model. So hopefully I'll be able to find some opportunities in that area as we come into the live stream on Wednesday. But we're also going to get the Case-Shiller index today, and this is expected to show a 15% increase. This number is going to continue to be hot. The housing market is just really tight. You have corporations, hedge funds buying up residentials, and my concern is in some of the areas that they're buying is they're actually buying them up to convert them to high-rise or commercial properties and high-density real estate. We'll have to see if some of that happens. That won't be for a while yet, probably into next year or the following year, but we're definitely going to be watching some of those events. But as we come into Tuesday, I don't have a lot of high expectation. It looks like we might try to retrace a little bit. There's nothing major going on in the trends. So let's go ahead and take a look at the charts, see how they're set up for Tuesday. As I reviewed the WaveTech database, we didn't see a lot of activity. We did see 570 buy signals, 439 sell signals, moved the bullish percent up just a touch to 35.90. We continue to remain below that 42% level. We're not getting a lot of traction at these all-time new highs, which once again says we're moving in a very narrow range with a lot of the large cap stocks actually driving the markets, and this is why the NASDAQ has been stronger than all the markets. Yesterday, NASDAQ was up 1%, S&P up 0.2%, and the Russell was down 0.5%. So we're just not seeing any type of real traction in the S&P or in the Russell, especially in small caps. But there's no real material things going on with this database. Just tells me we're going to continue to grind at these levels and possibly continue to grind higher in this pattern. As I review the S&P futures, we're continuing to see momentum stay very low. ppm1 is at a 0.09, ppm2 0.10, ppm3 0.07. So we're just climbing this slight incline and staying above all the averages. We're down 5 handles overnight, nothing material. Are continuing to see this very narrow range in the market grid, and sometimes it will take multiple days, but we should see the market trade back into these moving averages. We could print a 4,300 before doing that, but we're just grinding higher and there's no breadth in the markets. Reviewing the market grid, looking at yesterday's market grid, we did print up to an R2 level. S1 was 42.65, so we got an S1, R2 on the futures yesterday, and we just continue to grind within the market grid. As we look at today's range, we're looking at the possibility of a R2, which would be a 42.92. This would be an all-time new high. S1, 42.74. We're actually trading right at we've traded below the S1 number overnight, possibly going down to S2. So it is likely that we'll see an S2, R2 number. If we do take out the 68 level, or 42.68 S2, we'll see further downside in this market. But we're just not seeing any type of acceleration. As we go to the SPX, the market grid here is even more narrow than it is on the futures. We're looking at right now a 16 handle range, and that is very tight. When we get below 12, that becomes extremely dangerous. But we've seen such big numbers in this market over the past multiple months in the 20 to 30 handles. We're now about half of the volatility on a daily range basis lower, so this is presenting some relative risk on the downside. We came very close to printing RTX yesterday, 42.95. The high was 42.92, so we printed right at R3, and S2 was 42.73, and we had a low of 42.74, so we got an S2, we got an S2 R3 number. I thought we would get an S2 R2 number, so we were able to print through that number just slightly. As we look at the market grid for today, the possibilities are for a minimum of an S1, but most likely an R1, S2 level. If we do print through R1, then we're going to see a test of the R2, R3 level, which would be 42.98, 43.02. These are all-time new highs. But the only positive thing here is on ppm3, we're starting to see some moderate acceleration. Expect to see these ranges remain tight in today's session. As I mentioned in the opening comments, we did get an RXT sell on the NASDAQ futures yesterday. RXT was 14,444. We saw a close of 14,512. So we get that sell. We are down slightly overnight. Typically, when we get an RXT sell, we'll come back into an S1, S2 on the next day. So far, the low 14,471 is just below S1. Possibility of going down to an S2 at 14,442. So look for an R1, S2 on this market for today. As I've mentioned in the past, as we look at the PPMs, we're definitely in trend mode across the board. So the large cap tech stocks are going to continue to lead the way. This will keep the momentum to the upside, and we're likely to see this market continue to move towards some of the numbers on the market grid for the weekly that I covered in last night's video. The final market that I'll cover tonight is gold. Gold is down 450 overnight. We're back at that level that I discussed last week at 1776. We've just been completely flat here. The 10-period moving average now is at the 1786 level. The high overnight's been 1779. We look at the market grid, 1788.90, which is basically what we've hit, an R2. S1, 1776. We printed just below that, almost down to an S2. So I continue to see some downside potential here, even though we're starting to see the PPMs bleed off a little bit of the downward pressure. There's still a lot of pressure down, and the key number in this pattern is going to be 1761. So watch that number very closely. This will complete the video for tonight. Thanks for watching. We'll talk to you tomorrow night. Hey folks, if you enjoyed this content, make sure you subscribe, hit that like button and the notification bell so you'll know when I do these videos.